Hello everyone, hope you're doing well. Welcome back to the Road to Retiring channel. Today I want to speak about some of the top stocks in the AI industry, along with how each of them have performed historically and what the future outlooks for each of these could be. If you do enjoy this kind of content, please do drop it a like and subscribe, I'd really appreciate it. And I'm going to go into a quick snapshot on what each company has said about AI in the past. Starting with Google, you can see that they are saying why they focus on AI, and it's to develop and harness the potential of this organize the world's information to make it universally accessible. They're saying it is their view that AI is now, and more than ever, it's critical to delivering on that mission and commitment. So they seem very committed to sticking with AI, and it'll be interesting to see how they push this forward going into the future. We know that they have their own search engine AI integration they're working on, which they'll release to probably compete with ChatGPT, which puts us on nicely to our next stock, which is Microsoft. Now if we look at Microsoft, they're saying similar to Google, the era of AI is now, and they're showing a bit of the demo to do with that ChatGPT integration with Bing. If you look at Can You Help Me Write a Story, which I was on, you can see that you type that into the search engine and the ChatGPT integration is going to give you that story about a dog who lives on the moon right for you, just like that. So it'll be interesting to see how Google and Microsoft are going to compete with each other in this search engine space moving forward. Now looking at a slightly different industry, I want to look at the chips industry with Nvidia. Now if we look at Nvidia, they have said that the world of computing is going through an incredible change, with deep learning and AI computers learning to write their own software, and they go into quite a little bit of information about the AI software and hardware they're releasing now. If we look, they have their world's first portfolio of purpose-built AI supercomputers. They speak about the impact that AI can have on the cloud, and they also go into a bit of detail about self-driving car chips and how Nvidia are developing those. And in a direct competition with this, AMD, who we're going to look at next, have also doubled down with their new Ryzen 7000 chips, as these include a built-in AI engine to speed artificial intelligence content creation. And their CEO has said that they view these AI-based chips as the beginning of a wave. And they've talked about the importance of having these right computing for the right application, and they think they're doing that now by bringing it into the notebook form factor. I want to go over these four stocks and see how they compare to each other and what the future outlooks for each of these could be, as AI stocks are a very trending topic at the moment. Now, looking at revenue growth across the four, all four have really impressive revenue growth above 11% over the last 7 years, but Nvidia is coming out just at the top at 27.19% growth. Really good growth rates there from Nvidia, and consistently you'll see strong growth rates across all four of these in most metrics. In terms of future revenue growth, this is where Nvidia really stands out. All the others quite similar, between 10.8 and 13%, and Nvidia all the way out at 25.25% is coming out on top for revenue growth historically and future. And it continues to stay just at the top at 30.5% EPS growth, right in line with Microsoft 30.71% EPS growth over the last 7 years. But when we look to the future, Nvidia is actually expected to maintain these growth rates according to analysts at 31.5 future EPS growth rate. And you will notice there's a star on the AMD EPS growth here, and that is because we could only look at the past 5 years rather than the past 7 for AMD, as they were not profitable until 5 years ago. Now, if we do look at the profit margins these companies have, you can see that AMD is really slacking compared to the others, and Microsoft really stands out at 36.69%. Quite considerably higher than the profit margins for the other three. Looking at share dilution, this is where AMD gets really spooky. Historically, their shares have grown at a ridiculous rate, but in 2022, they did announce a share repurchase scheme that they're moving forward with, which they said, yes, February 2022, they announced the approval for an 8 billion share repurchase program. However, This hasn't had a massive impact, but they haven't released any new share, which is good. If we look annually, obviously it was climbing a lot up until this 2022 date, moving from 935 million shares to 1.6 billion shares in 2022. But since this announcement, it has moved from 1.62 billion shares down to 1.61 billion shares. So obviously not the rate and buyback that I think people are wanting, but it is good to see that 9% share dilution is hopefully going to slow down, as if that kept up, it's going to destroy any sort of returns that people are hoping to see on an investment. Now, moving into the next thing, I want to have a look at the current PE ratios, because the valuations for Nvidia and AMD are absolutely crazy at the moment. Now, if we look at these PE ratios, you can see that for Google and Microsoft, they're relatively normal, around the 20.5 mark for Google, which is quite nice and low, compared to the 28.37 for Microsoft. But then Nvidia and AMD are currently trading at P ratios of 137.3 and 97.05. I mean, the valuations for these are just crazy. But this is because of how strong and ambitious their future EPS growth is amongst the analysts. I'm going to go into how this is going to impact our buy values in a second. If we look at the percentage difference to the sectors, you can see that Google's is only 10% above the sector median, and Microsoft is only 20% above, whereas AMD and Nvidia again trading just massively above at 483% and 311% above the sector median. And in terms of their 5-year averages, Google is sitting 33% or 34% under its 5-year average, which means it could be at a really nice value right now. And Microsoft also is sitting under that 5-year average at 16% under. AMD has historically had this very high PE ratio at 91.06 being their 5-year average, so it's actually not differing from that too much right now. But for Nvidia, it is, and it's 128% higher than it usually is, even though their usual PE ratio is still ridiculously high at 60. Now, Google and AMD do not have dividends. Nvidia has a small dividend at 0.07%, but Microsoft has this 1.07% dividend yield, which I think makes Microsoft quite nice for any dividend investors out there. And I think Nvidia's could be nice if they grow the dividend, but people would be worried that this is going to take away from innovation. And we've seen what happened to Intel recently and how their chips have really struggled, and they had to cut their dividend by 65% because of this. And so I think investors would be slightly worried that something like this would happen to Nvidia if they were to pay a significant dividend and then say AMD didn't, then they might be able to catch up to them in the chip space. Now, looking at my fair values now, we can see that Google is coming out the best, 3% under, the market price being 3% under my current fair value. Then Microsoft being the second best, 8.76% under my current buy value. And Nvidia and AMD are kind of similar, around that 30% under the current market price. So we'd be looking for a significant drop from both Nvidia and AMD before we really want to buy them. And I think based on what we've seen here, in terms of the really strong future EPS growth for Nvidia and the strong future revenue growth for Nvidia, Nvidia's definitely one I would want to own, along with the nice share dilution, because who knows how long that share repurchase program will last for AMD. But right now the valuations are just crazy for both of these, and I would like to see those valuations come down. I'd be more inclined to buy Nvidia than AMD, but right now it's neither at the current percentage differences to our buy values. And if you want to know what the compound annual growth rate would be to our 2028 estimates, well, Google is coming out on top, 12.5% compound annual growth rate on an investment you make now. Microsoft bringing a 9.84% compound annual growth rate from an investment now. Nvidia bringing a 3.78%, but this is just a 2028, and if we saw continual growth past that, then this would continue at a greater rate after that point. It's just about how early you want to get into these markets, because right now they're at crazy high valuations, and those valuations might not come down for a while. Lastly, I want to speak about AMD at 5% compound annual growth rate if we include dividends. Now, this obviously is a very quick snapshot on some of the stocks in the AI space and what their potential values could be and how they've grown in the past. If you want to see some more detail going into on each of these, I can break some of them down if you want to see how I did this. But if not, then and you enjoyed the video, then please drop it a like, as I said, subscribe, and I'll try to catch you in the next one. Bye guys.